What's up, everyone? This is Nick, and for this week's episode of my funded journey, I thought I would take a break from just giving updates on what I'm doing and instead give my full review on the important sort of elements of Bulenox. So if you are thinking about setting up an account with them, I'm going to give you all the information you need right here to know if it's right for you and the sort of process you need to go through. I've kind of just condensed the key rules into this, so if you are thinking about it, this is the video for you. And I'm also going to share my approach and the slight updates I've made to how I'm trading with my funded accounts and how I'm going to get more funded accounts in the future. So I'm just going to jump in and stick around till the end because I am going to share with you my 70% discount code that I now have with Bulenox. I will keep on updating the descriptions in this video and other videos to keep up to date with what the latest discount code I have available. So yeah, let's get into it. So to start off with, I'm going to look at the different account sizes that Bulenox currently have to offer. Now I'm not applying my discount to these because there's going to be times where it's going to be a different size. So I'm just going to go purely off of the dollar amount that they're charging for these to kind of give you a good comparison. So I haven't included the 10K in this just because I think the value of that is really poor. So I started out with a 25,000 and that goes all up to 250,000. And you can kind of just look at this and see what differences are. As you increase in size, you get to trade more contracts. You have a larger amount of drawdown, and obviously the profit target continues to climb up as well, and that profit target is for the qualification account. Now I've highlighted the drawdown because I don't see a $50,000 account as a $50,000 account. I see it as a $2,500 account. Realistically, if you lose $2,500 at any point during the qualification, you lose that account. So it's not a 50K account, it's a 2.5K account. And same for the 150K account, you have a $4,500 account. Now, the big thing here that they've introduced recently is the first 10% is a $10,000 profit you make is 100%. And then after that, all of it is 90%, which I think is really good. I've put in a few extras down the bottom. So for the 25K account, you pay a $135 one-time fee on completion of the qualification account to set up the master account. That's then $145 for the 50,000, $245 for the 100,000, $495 for the 150,000, and $895 for the $250,000 account. And what that means is you are actually paying a total, without discounts applied obviously, of $280 for the 25K, $270 for the 50K, $300 for the 100K, $820 for the 150K, which is a massive jump up considering that you're getting $1,500 more drawdown only. So you're paying $520 more. So just keep that in mind. And then $1,435 for the largest account, the 250K account. And the drawdown on that is only $1,000 more. And I've put down below that sort of like the value you're getting. So on the 25K account, you are paying essentially slightly more, about 18.5 cents for every dollar of funded funded capital you get. That's assuming that you don't use any discount codes and assuming that you pass first time. Each of these has a $78, I think it is. That's later on, $78 reset fee. So if you have to reset the 50K account 4 or 5 times, you're going to pay substantially more than the amount I have here. Now the 50K account is just under 11 cents per dollar, and the 100K account is currently at around about 10 cents per dollar. And that is because they have applied this $60 off coupon. So you can get better deals than this, so it's definitely worth looking around. But the key, I think, here is that the 200 is the one-time fee code. It is the one-time fee. That's the important thing to look at. Don't just see I can get a deal on the 50K and pay $50. If you need to be aware that if you pass it, there is that $145 one-time fee. So you need to consider the whole cost of it, not just what's advertised here. That's really important. Obviously, the larger the account, the more contracts you can trade. However, as you can see, that max drawdown on the 250k account is only at 5,500, which means that 25 contracts, you're not going to be trading that for a very, very, very long time. If you only really want to be risking a couple of percent of your max drawdown, you're not going to be trading 25 contracts probably for 9 months or a year. And if you're going to be putting up $1,400 for that, it might not be the best plan for you. Obviously, everybody's different and will approach this in a different way in different stages in their career. But just be aware that max contracts doesn't necessarily mean you can trade those immediately. You're still going to have to take quite a bit of time to build up to it. So that's just there so you get an idea of the different costings. Now, there is one thing, and you can see actually here, it says option 1, no scaling account, or option 2, end of day account. And this is really, really important. The difference between these two is absolutely massive. The no scaling account, which is option 1, scales your account or scales your drawdown as your account grows on paper. And I'm going to show on the next slide a diagram of what that looks like. But essentially, that means if you open a position, it's up $300, it doesn't hit your take profit, it comes back down, and you stop out for $200 loss. It assumes your drawdown is based off of the $300 of potential profit you had. And this means that unless you get out of a position at the very top every single time of the potential profit, you will see your drawdown getting closer and closer to you despite no movement. Whereas option 2, which is the end of day account, scales based on your end of day account size. And I think that this is really, really important and the only option you should really consider, because it means that you can have a day where, let's say you make $1,000 on your first few trades and then you lose 800. Well, the account is only going to change the trading drawdown by $200 rather than moving up by 1,000 and then holding it back. And by trading drawdown, what they mean is you start with 2,500 on the $50,000 account, for example. When you are $500 in profit at the end of the day, that gets moved up. So it's now $2,500 from where your account peak is at the end of the day. With option 1, it's trailing from where the account potential peak is. And what that looks like is here, you can see the top graph I've very crudely drawn shows your position over time. It hit a maximum of $300. Let's say your target was $400, but it doesn't quite make it and it comes down, you lose $200 on the trade. Absolutely fine. Execution could be perfect. And what that means is initially in the bottom graph, you've got a $2,500 drawdown. This is based off the 50k account. But because your account was $300 in paper profits, it means that your new drawdown is only $2,200. And what that looks like on account size is, to start off with, you have a $50,000 account, which means that the account gets blown or cancelled at $47,500. After this trade, your account balance is now $49,800. However, you can only go down to $47,800. So despite losing $200 on the trade, you now only have $2,000 worth of risk. Now, if you've been using the end of day scaling account, that account blown level would still be at $47,500. So really important to make sure you go with option 2. I don't really see the benefit at all in option 1. Being completely honest, that is Bulenox's way to make as much money as possible, because the likelihood of you blowing an account on that sort of scale or that sort of scaling program is incredibly high. So I'm just going to go through some of the key rules for the qualification and the master account. So the first one, which they have updated very recently, I made a video on it the other day, is you must trade a minimum of 5 trading days. And holidays and weekends do not count and hit your profit target for you to get a master account. So that means if after 4 days you've hit the target, you still need to make a trade on the next day. Now what I do and what I know loads of people do is they hit the target using minis and then they take a 1 micro contract position, which essentially means that they can get in and out of it for a couple of dollars and it doesn't change the profit really on the account. But you need to make sure that you have actively traded on 5 days. Obviously, you do not want to hit the maximum trailing drawdown, and there is also a daily max loss, and that's dependent on the account size, which is over here on the right. For a 10K account, if you do go with that, which I didn't put up on here, it's 400. For a 25K account, it's 500. For the 50K account, it is 1100. For the 100K account, it's 2200, 150, 3300, 250K, $4,500. I made the mistake of letting my very first account. I knew I was down 800 on the day. I put in another trade and it blew the account, and I honestly wanted to see what happened more than anything. I didn't know whether they would just say you can't trade anymore today, but no, they actually blew the account and they said that's it, you're done, you're gonna have to reset this account. So make sure you do not hit that daily loss limit. All positions must be closed between 3:59 CST. I've never come anywhere close to this. I don't know what happens if you hold a position longer. That might be an account termination, or it could be a slap on the wrist. I have no idea. Just don't do it. The reset fee is $78 for all accounts. So if you break one of these rules, you hit your daily loss limit, you hit the trailing drawdown, maybe you hold a position past 3:59 CST, your account is closed and you have to pay $78 to reset the account to the starting amount. Now you could do this at any point. If you're down, say on the 50K account, let's say you're down $2,300 and you're like, I can't really take a trade that to get myself back in the green, like I'm just going to get stopped out immediately. You can prematurely reset it. There's no problem with that. But just be aware that every time it's $78 you do so. You can trade up to 11 accounts. You can have a mixture of master and qualification accounts. It's what I have. I will have a master account up and running, and I'll also have qualification accounts getting qualified. You can have up to 11. Being completely honest, get one done. Get to a point where you're making money with the master account, and then consider getting another one. Don't just decide, oh, I can get 5 right now. Probably not the best way to go about it. One really important thing, and this is the same for the master account, is keep up to date with changes. They do make updates every now and again, and some of them are going to benefit us traders more. Some of them might hurt us more. They might introduce a rule. They might change the daily loss limit, and you're completely unaware, and all of a sudden you get blown out of an account, and you're like, what happened? And it's because they changed the daily loss limit. So these rules are in effect right now. It is the 25th of February 2023. In a year's time, these rules could be completely different. So make sure you go and do your research on that. Now, the master account, initially, they're exactly the same as a qualification account. This whole, the initial drawdown, it's trailing, it's all the same. So if you make $1,500, and this is assuming you take the end of day account, you make $1,500 on the 50K account, well, now you can lose 2.5K from that point. So all the rules are the same in terms of when you have to close, the daily max loss and all of that. The only difference is there is no option to reset. So if you've got a master account, you've passed the qualification, and you hit that max loss for the day, or you hit the max loss for the account, you cannot just pay a fee and have your master account reinstated. You have to go back to doing a new qualification account. So a lot of traders I know will get qualified pretty quickly and then trade much smaller size to avoid all of that. I'm going to show you my approach later on, which is very different to that, but it is something to consider. If you have managed to get funded inside of like 5-6 days, I've got funded after 9 days, after 4 days, and after 2 days, I think, of my records so far. I know people have done it inside of a few hours. That doesn't, what you can then do is say, right, I'm now going to trade a quarter or a tenth of the size of what it was before to make sure I don't get don't hit any of those stop losses, because once you lose this account, you lose it forever. Now, the two key things here to be aware of is the trailing stop, that starting amount of 2,500 on the 50K account, for example. That trailing stop is removed once it hits the starting balance, which means that as soon as you hit $2,500 of profit on the 50K account, or 3,000 on the 100K, etc., every dollar you make after that, you are increasing the amount of risk you have. Right? So you don't have to worry. If you've made $12,000 on the 25K account where you got $1,500 of risk, you don't have to worry that if you lose $1,500, you lose that account. That's not the case. You can then go down to the starting account. So once you've made enough money to get beyond that amount, I kind of see it as a case of now you have an account. You can't You can't blow that account unless it goes into the red. The daily loss limit is also removed once trailing drawdown reaches the starting balance. Now, I'm going to be completely honest. I don't know if, for example, you've got a 100K account and you've made $3,100 and they're like, right, the daily loss limit has been removed. If once you go back within that 3,000, if it gets reinstated, I would say don't try and find out, right? If you're in that 3,000, if you're in that sort of like lower end of profit, don't hit what the original max daily loss was. It's already a large amount of your account, so just don't do that. But yeah, they're the rules, and the trailing and the end of day drawdown amount on the right hand side again just shows you how much you can lose on each account before it gets blown. Now withdrawals, and this is something that I haven't gone through yet. I can't wait to make my first video where I share the withdrawal process. But these are the current rules. You can make a withdrawal anytime after you have actively traded for 10 days. Okay, so you can't make 10K on day 1 and then withdraw it on day 2. You have to actively trade for 10 days. The first 3 payments are a minimum of $1,000, and the maximum is dependent on the account size, which I have over on the right here. So on a 25K account, the maximum is 1,100, I think. Let me just double check that. No, on the 25K account, the max is 1,000. On the $50,000 account, it's 1,500. 1,750 on the 100K, 2K on the 150K, and 2.5K on the $250,000 account. So the first 3 payments on, say, the 50K account, the maximum you can take out is $4,500. The reason for this, again, is because Bulenox does not want people doing hit and run, making quick profits and taking them all out. The whole point of these accounts is for a long-term relationship so that you can use this trading account for months, years, as long as you can, right? So there's give and take with these, right? We have to accept that these companies need to make their money. So they're going to try to limit traders in the early days to kind of fish out the ones who have just got lucky over a very short period of time and not allow those guys to make a huge profit from them when they're not actually successful traders. Bit of give and take. You got to accept that. Now, the first $10,000 that the trader makes on all accounts, you will keep 100% of the profits of that. After that, and this is a new rule, the profits are split 90-10. So 90% to trader, 10% to Bulenox. And this is, the commission is charged when you make a withdrawal. So if you make 15,000, your account isn't going to show 14,500. It's still going to show 15,000. When you pull out, when you pull out the profit beyond the 10K, it will then take off their percentage. Withdrawals cannot take the account below the safety threshold, which is the starting amount in the account and the initial drawdown plus a tiny little bit, I think. So on the 50K account, that's 2,600. On the 150K account, that's 4,600. What this essentially means is that if you go and you make $2,700 inside those first 10 days, like I want to pull money out, they will not allow you to take that out because the minimum has to be 1,000, which you're below because you can only take out $100 worth of actual profit. So just keep this in mind. You can go into the withdrawal safety threshold when you close your account. So let's say you make 50K and, for example, you might get an offer from their partner, which is a big thing that I'm aiming for. You get an offer from their partners to trade with their account. And you say, I want to close these now. You get that initial safety threshold back. So you'll get it back, but only when you close the account. Now I'm going to go through my sizing approach really quickly. I've split it into 5 different stages: the qualification stage, the early 2 stages of a master account, when the master account begins to get into profit, and then when I'm looking to size up. So stage 1 is the qualification. I worked out that my strategy has around about a 90% chance of hitting plus 7.5 R before having a negative 6.25 R drawdown. And the reason I worked out those exact numbers is with 1 mini, 1 R for me is around about $400. $400, 7.5 R takes me to the $3,000 profit that I need on the $50,000 account. So therefore, I use minis with 1 R being 400, as I just said. And as long as I trade accurately, there is around about a 90% chance of me getting qualified with my current strategy. I did some testing through all of my trading data, and I have not actually found a period where I would have failed the account as long as I followed my trading rules exactly. And to be honest, I think that's the case with most strategies. If you followed them correctly and you find the sizing size that gives you a good chance of getting qualified, then you should always do it. Now, there are some trades where I should take 2R as risk. I'm only going to take 2R risk trades, which is $800, when I am already positive on the day, or if it's like gonna be the last trade of the day and like we've got 10 minutes before the last trade I can possibly take, and it's like, well, yeah, this is to avoid hitting the maximum $1,100 daily loss. If I at any point hit negative 2R, which is negative $800, I stop trading for the day. I don't switch sizes, I don't do anything, I just leave it for the day. And this is critical because there are some days where last week we had a day which lost over 9R. For me, if I was getting qualified or was in the early stages of an account, to protect myself, which I'll go through in a second, on the early stages, to protect myself, I would lose 2R as a maximum on those days. Of course, some days I would lose 2R and then make 5, 10R, and that sucks. But that's again, part of that give and take. And for me, I must start at the beginning of a day. I made the mistake of starting partway through the day, and it really hurt me. I ended up blowing one of my accounts as a result. So the first trade that I take with minis has to be the first trade of the day. Stage 2, this is the one you've been funded for me when I have a master account, but it's in that initial under 2.5K. This for me is the same as stage 1. I use minis with 1R being 400. I should take 2R, but I won't unless I'm in profit. If I hit negative 800, I stop trading for that day, and it must start at the beginning of the day. For me, this stage 2 is exactly the same as getting qualified. It's exactly the same because there is the trailing drawdown and the maximum stop loss. So there's a 90% of me getting through stage 1. There's a 90% of me getting through stage 2. So that means that any account I have has around about an 80% chance of getting beyond this point. Now, stage 3 is when I've got that 2.5K up to around about 6K. The daily loss has now been removed, or the maximum daily loss is now removed. The trailing drawdown has stopped. So every dollar I make is added risk. However, because my account is still in that sort of fragile state for the size I'm taking, I'm going to continue the exact same rules to avoid a major setback. Now, I said there was a 90% chance of me getting to that 3K mark. So that was to get through stage 1, 90 to get through to stage 2. That begins to increase because now, let's say I make another, 5R, for example, and I'm then up 4,500. Well, that 5R is then added to that initial drawdown. So I'm not now at a point where if I have a 6.25R drawdown, now it's a 11.25R drawdown. So once you get into stage 3, the further into stage 3 I get, the higher chance of moving on to stage 4 is. Probably around sort of like 93, 95%, honestly. So I've estimated that to get through stage 3 is probably around about a 75% chance, maybe a little bit higher with some of the rules I've put in to prevent the bigger drawdowns. And that means that 75% chance of me getting through to stage 4, which is the point where I begin to feel relatively safe. I haven't had many drawdowns which are 15R in the past. I think there's only been, in my actual trading, there has only been one that was at 14R. So, that's happened once in a few hundred trades in 3 months. So at 6K, which is 15R, I'm fairly comfortable that I'm quote unquote safe. Touch wood. Who knows? Maybe I'll go for a 20R drawdown next time. But at that point, the account is starting to get safe. Whilst the account remains above 6,000, I should say 6,000 in profit, the rules are removed. All 2R setups are now taken, and there is no stop at $800 loss for the day. Now, obviously, if I'm sitting at $6,100, I'm not going to apply that rule. If I take a loss, I have a $5,700 account, and that $800 max loss comes back into play for me. Okay, so it's the exact same. Maybe I'll increase it to 1,200. We'll see at the time. But the rules, the more profit I have in the account, the more I want to lift restrictions and continue to give myself the best chance of making the maximum profit possible. At this point as well, other master accounts. So I've got, for example, a master account right now. I've got a qualification account, which is going to be given the tick mark, and I can trade as a master account from the start of next week. I will begin trading that initially as micros until I'm in stage 4 on the current master account I'm trading. Once it's in stage 4, I will go to minis on that one, because now I'm at a stage where if I do go through a 6.25R drawdown, I still have one of the funded accounts. And I will also probably at that point consider getting another qualification account. Now stage 5 is the point of sizing up, and I'm going to take a shot method, which is something that I used to do a lot when I played poker. The idea here is once I have made 35R, I will take a 5R shot at larger size, which is actually 10R. So 35R for me is $14,000 of profit. At that point, I will, instead of taking 1 mini / 2 minis, so 2 minis is my bigger size, I will take 2 minis, an $800 risk for 1R, and $1,600 risk or 4 minis for 2R. Now, if I lose 5R, that's 10R of the old minis, I will go back to 1-2. The reason I'm using this approach is if the moment I size up, we have a massive day, and it's like a massive 10R day, obviously, I'm then going to be safe at that size. But if we enter a really big drawdown, I'm not going to put my account at risk. So it's just making sure the account remains safe, whilst again giving it best chance to continue to grow. And I'll repeat this at 3.6, which is about the maximum. I could go to 7, but 3.6 is where I want to be, maximum for 50k account. I get 3 accounts like that. 3 accounts at the 3.6. I'm essentially taking 9/18, which is $3,600 / $7,200 of risk, which is plenty big enough for the time being in terms of, in the near future. Now, like I said, there is a 70% discount code you can use. If you click on the affiliate link I have down below and use this code, you will get 70% off a number of the accounts. I'm not going to go through exactly which ones because it isn't worded very well, but I'm pretty sure it has all of the end of day accounts in there. If this discount code doesn't work, simply type in Bulenox discount code into Google and find another code. That's what I did. I found tons that were like 80%, 70%. There was one that was 90%. And you just have to keep on trying them and see what the best available one is at that time. There are going to be periods where Bulenox don't offer as many deals, and you might have to just wait a couple of weeks or use a 50% discount code. And then there's going to be other days where they will suddenly come out and say you can get a 90% discount code. So you just have to be savvy with it. Don't rush into these sort of things. I'll make a video at some point on the whole process you should do before getting funded. But if you are at the stage where you're like, I want to join a prop firm, I'm confident that I am a profitable trader, I hope this video has given you all the information you need and an example of how I'm using it to trade. Thanks for watching till the end of the video. Just adding a quick piece in here to let you know what extra services I have to help you become a better trader. On my site, guidedtradingmeditations.com, you can find my new course, The Trading Blueprint, which gives you a full guide on how to create an edge, test it, start trading it, and scale up. There are sections included on how to find the weaknesses in your trading and then how to resolve them, as well as many other bits of information that I've gathered in my years of experience. The aim of the course is to make you a fully independent trader, so you don't need to pay ever-growing monthly fees to be in a chat room. There's no specific edge needed. You can use this in any market with any trading style. If you're at a stage in your trading where you're struggling and would prefer a more in-depth look at your own personal weaknesses and ongoing support, you can also book one-on-one coaching with me on the site. There's a cool breakdown on the screen right now, so pause the video and read through it, and if it's something you're interested in, check it out. There's a ton of other content on the site that I'm really proud of and I've really enjoyed making. So if you're interested, please check it out. I'm sure there'll be something on there that can help your trading. You can reach me on Twitter. My handle is in the description down below. You can send me a DM if you'd like any more information. And make sure to like and subscribe to stay up to date with future videos.